Time now to get the spoken word on what's going on with the stock market and other ancillary stuff ahead of the next Fed meeting, which comes up in September. Joining me is our chief equity strategist, John Blank, remotely via Skype. Hey, John, you know, August market came in with a fresh market high, but what happened in the meantime here?
Well, Terry, we're just doing a little adjustment downwards towards the middle of a fair value range right now for August. We got ahead of ourselves, but we got ahead of ourselves in a good sort of way. That's the level we're going to come back to and rise above in October time period. But for now, we've gotten ahead of ourselves on fair value, Terry. It's 15 times 112 earnings, and you can do the math. It's going to take you somewhere close to where the market's trading today.
Okay, so what is going on with the latest interest rate spike in relation to its impact on the stock market?
Well, Terry, it's definitely the thing that's taken us down here. We saw that the 10-year U.S. Treasury rate get to 2.7% the other day, and that is enough to get the housing starts numbers to start to be a little soft. So we are getting some feedback from that 10-year into the fundamentals on housing, and that's one of the main props that's holding this market up. So that's the other reason we're going sideways here is we need to get beyond this taper and see how the housing market holds up.
All right, what about your sense of the next Fed meeting coming up next month in September?
Well, Terry, I think we're going to have a debate that goes two ways. One is the housing numbers are not actually that well, which could actually push the taper off to October or even later. But the jobs numbers are coming in higher, so it's going to be a debate. We're going to see that debate real time in the minutes as they come out here in a few weeks. But I think it's a plus one and a minus one. And, you know, if it were my scorecard, I think the 60–70% taper in September might be a little high. I might put it myself out to October, and that might be the surprise here.
What role is the latest news out of the retail sector going to play in the overall taper timeline?
Terry, I think we're doing fine in retail. You know, we've had some softness in the Walmart numbers. That's typically related to the effect of the oil prices. We're getting up to 107 on the West Texas Intermediate, and that's pretty high. And typically, what you see is the lower middle income retail like Walmart and Costco, they get hit by that oil. So I think that's what we're seeing is an oil price effect, not an economy effect.
Give me a couple of picks that you might want to share with everybody as far as stocks go.
Terry, I'll tell you a couple ones. One is Centene, which is a insurer of HMO type insurer, health insurer that's going to be benefiting from the coming expansion of care from Obamacare. I like that. I like Volkswagen, VLKAY, which is a major German automotive company, and I think they're going to start to accelerate here with a rise in a cyclical movement in Europe. And even if it doesn't happen, they're going to pick up the global rise in auto sales anyway. So those are two names that I like a lot, Terry. And I think outside of that, you know, the regional banks in the United States are also turning into a decent play here, even at this stage of valuation. And they're the one area where there's still some valuation expansion to go. And that's what's been driving this market up all year.
I can just picture you driving around the West Coast there in your VW Beetle.
Okay, Terry, I gotta say I got it parked outside, but I'm not gonna put it on camera for you.
Okay, that's all right. John, thanks. We'll catch you next time. Our chief equity strategist, John Blank, joining me to give us the spoken word on the market ahead of the Fed. Until next time, I'm Terry Ruffalo. All right.